Welcome to everyone. First, I would like to apologize for the audio quality of my last week update video. I get some technical problem. I am going to try to fix the problem and change the video for the future viewers. Having said that, in this week video you will learn how powerful and profitable are the cycles and how to use them to trade the gold market to increase your profits. This week video will cover the gold market for the week of March 25, 2024. Before we start, make sure you read carefully the disclaimer. To analyze the gold market, I use the GLD ETF. On the 18-month cycle, the long-term target was $200. The $200 marks have been reached on Thursday, March 7th. The success rate for the 18-month cycle is 100% for this year. The peak of this cycle is expected around July 2024, the red dashed line, and the low for the end of 2024, beginning of 2025, the yellow bar. We will have a more precise time target when the market will unfold on the lower time frame. On the gold future price, the new all-time high is $2,225. Because on the 40-week cycle there is nothing new, so let's start by the 20-week cycle. The last gold ETF 20-week cycle low was on February 14th at 183.78. The peak for this 20-week cycle can be expected around the April, the red dashed line, and the low end of June, the yellow zone. The trend cycle for this 20-week cycle is still up. Trading this cycle was very rewarding by making $6 or 3.5% of profits. The trading cycle signal occurred when the gold ETF crossed above his cycle at 190.46, providing an upside target at 197. This was the minimum target because the 18-month cycle upside target was $200. How did we get this target? We subtract the crossing point from the last low number made below the cycle line. Then we add the result to the crossing point. A very important precision. To be a valid signal at the crossing point, it must be the median price line cross above or below the cycle line, the yellow line. And when there is two cycle lines, to be a valid signal, the median price line have to cross above or below both cycle line. Like for example on the 40 and 80 days cycle chart. In this case the crossing point was 190 and the previous low was 183.78. So 190.46 minus 183.78 is 6.68. We take $6.68 add to the crossing point 190.46, the target will be 197.14. On Tuesday, March 5th, the gold ETF made a high at 198.14, meeting his 20 weeks target, this in 2 days only. If trade the Monday signal, the profit is 3.5% in 2 days. The success rate for the 20-week cycle is 100%. The trend for this cycle is up, because we are in the up phase of the cycle. If you want to learn more about the target calculation and about the cycle lines, I posted below a series of 4 videos about understanding the cycles. I explain in detail all the secret behind the cycles. That's the power of the cycles. The rate of success is usually very high. The 80 days cycle. The 80-day cycle peak is still to come. The last week high was already on the right part of the cycle, after the red dashed line, confirming the gold market is still in bullish mood. The last 80 days cycle low formed on February 14th at 183.78. The next low is expected to form on April 22nd, like mentioned on the roadmap. Technically the low for the gold ETF should find support on his cycle lines. At that time the lines will be at 200 and 199. The purple trend line is the 80-day cycle trend line, what's first called VTL. VTL stand for valid trend line. Will be used to confirm the 20-week cycle peak. When the next 80 days cycle low will be confirmed, I will adjust the trend line. And when the gold ETF will cross below it, this will confirm the 20-week cycle peak is formed or in formation. The success rate for the 80-day cycle is 63%. The trend cycle is down. Trading the last signal was very productive with a gain of $3.89 or 2.42% in 7 days. The last trading signal was on February 21st, when the gold ETF crossed above his first cycle line at 187.67. And the second line have been crossing on February 23rd at 188.33. The crossing provide a target zone between 191.56 for the lower part and 192.88 for the top part. With an high at 193.40, the gold ETF meet and exceed his target on Friday, March 1st. The 40 days cycle. The last 40 days cycle low was right on time on March 19th, like expected on the roadmap. Technically at that stage of the cycle, the gold ETF supposed to find support on his cycle line. But due to the bullishness of the gold market, the low was above his cycle line. The next low is expected on April 22nd. Since this is the second 40 days cycle from the February major low, it will be also the 80 days cycle low. The first 40 days cycle peak occurred on the right part of the cycle, the red vertical line. So we can expected the second peak will occur at the peak of the cycle or even before. At the time the gold ETF will form the second 40 days cycle low, the gold ETF should cross below his cycle lines, providing a downside target for this 40 days cycle. For now it's still too early to estimate where the cycle lines will be at that time. We will know when the gold ETF formed his 40 days peak, when the market will cross below the cycle trend line, the blue line. Since the crossing of the trend line also confirmed the peak of the next longer cycle, the peak will also be the 80 days cycle peak. Here how the cycle trend line or VTL works. The cycle trend line is one of the powerful tools of the cycles. How it's work. I draw the blue trend line from the last 80 days cycle low to the first 40 days cycle low. When the gold ETF crossed below this trend line, this will confirm the high of the next longer cycle has formed, or is in formation. In this case, we deal with the 40 days cycle and the next longer cycle is the 80 days. The success rate for the gold ETF 40 days cycle is 100%. Since the previous low was on March 19th, the cycle trend is up. The 20 days cycle. The last 20 days cycle peak occurred on March 8th with a high at 203.30 and the previous low was on March 19th. The gold ETF supposed to cross below his cycle line for the last 20 days cycle, but instead found support on his cycle line, confirming the gold market still bullish. The next peak is expected around March 31st, the red dashed line, and the low on April 5th, the yellow zone. When the next 20 days low will be confirmed, I will draw on the chart the 20 days uptrend line. This trend line will help to identify the next 40 days cycle peak. When the gold ETF will cross below this trend line, this will confirm the 40 days cycle peak is forming. The last trading signal was when the gold ETF crossed above his cycle line on February 23rd at 187.43 for a potential target at 191.08. On Friday, March 1st, the gold ETF meet his target for a profit of $3.65 or 1.95%. The success rate is 100%. The cycle trend is up the first 3 days of this week, and Thursday and Friday is pointing downward. What's next? Where are we on the roadmap? On my last update, I published the following roadmap for the next 2 months. Since the 40-day cycle low was on March 19th, like expected, we are right there. On my last gold update I mentioned, since the gold is very bullish, there is a possibility the gold ETF doesn't cross below his 20-day cycle line to form the 40-day cycle, but find support on it. It's exactly what's happened. The 40-day cycle formed above his cycle line and didn't cross below, so for that reason no crossing occur on the upside either, and no new upside target have been triggered. Around the first week of April, the market will cross again below his cycle line, providing a downside target for the 80-day cycle, with a first low on April 11th. Then rally using his cycle line as resistance, and resume his decline to form the 80-day cycle low on April 22nd. The 10 days cycle. The last 2 trading signals we get since the last update was for the first one on March 14th. When the gold ETF crossed below his cycle line at 200.55 for a potential target at 197.80, or $2.75 or 1.57%. On March 19th, the gold ETF make a low at 198.94, missing his target by $1.14 or 0.58%. The fact the gold ETF missed his downside target is due to the bullishness of the market. The second trading signal was on March 20th, when the crossing occurred at 200.36, providing a potential upside target at 201.78, or $1.42 or 0.71% of potential profits. The same day the gold ETF meet and exceed his target to make a new high. The last 10 days cycle low was on March 19th and the next one is expected for March 26th. Technically, the market should find support on his cycle line on March 26th. On that day the cycle line will be at $200.89. If on March 26th, the gold ETF cross sharply below his cycle line, this will be the first sign of some bearishness coming to the market. The success rate is 87%. In conclusion, for now there is no more upside target to fill up. Even if the monthly $200 target have been met, with a new all-time high at 203.92, the long-term cycles are still bullish until the summer. If you like this video, don't forget to click on the like button, subscribe to make sure you don't miss any future videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.